In a world where financial markets are constantly shifting, the current state of global shares presents a mixed bag of outcomes, particularly as investors eagerly await a pivotal decision from the U.S. Federal Reserve later this week regarding interest rates. This anticipation has created a sense of uncertainty that is palpable across various markets. In early trading on Monday, France's CAC 40 index experienced a notable increase, climbing by 1.2% to reach 7,915.30. Meanwhile, Germany's DAX index also saw gains, rising by 0.6% to settle at 23,838.03. On the other hand, Britain's FTSE 100 remained relatively stable, experiencing a slight dip of less than 0.1%, landing at 9,282.51. Across the Atlantic, U.S. markets appeared poised for a modest upward trend, with Dow futures increasing by 0.2% to 46,288.7.00, and S&P 500 futures edging up nearly 0.1% to 6,650.50. Turning our attention to Asia, Hong Kong's Hang Seng Index added 0.2%, reaching 26,446.56, while the Shanghai Composite Index saw a slight decline of 0.3%, settling at 3,860.50. However, beneath these numbers lies a growing concern regarding the health of China's economy. Analysts have pointed out that the economic data for August has not been robust enough to indicate sustained growth, particularly in light of the adverse effects stemming from former U.S. President Donald Trump's tariff policies. Lin Song, an economist at ING, highlighted this issue in a recent report, stating, China's economy continued to slide in August, with all key activity readings falling short of market forecasts once more. She further emphasized the need for immediate stimulus measures given the ongoing slowdown observed over the past few months. Retail sales in China, for instance, rose by only 3.4%, marking a 12-month low and a significant drop from 5.7% in July and 6.8% in June. This figure represents the slowest growth rate since last November, raising alarms about the underlying economic trends. Stephen Innes, managing partner at SPI Asset Management, noted, the underlying flow is shifting. For years, Beijing relied on exports to sustain growth, even as the property sector faced challenges. However, with Trump's tariffs disrupting supply chains, that support has diminished. In Australia, the SP/ASX 200 index experienced a slight decline of 0.1%, closing at 8,853.00, while South Korea's Kospi index gained 0.4%, reaching 3,407.31. It's worth mentioning that stock trading was halted in Japan on Monday due to a national holiday. As the week progresses, expectations are mounting that the U.S. Federal Reserve will implement its first interest rate cut of the year during its upcoming meeting. This potential move has created a sense of anticipation, but it also carries the risk of disappointment. If the Fed decides against a rate cut, markets could react negatively. In the energy sector, benchmark U.S. crude oil prices rose by 31 cents, reaching $63 per barrel, while Brent crude, the international benchmark, increased by 27 cents to $67.26 per barrel. In currency markets, the U.S. dollar saw a slight increase, rising to 147.67 Japanese yen from 147.65 yen. The euro remained relatively stable, priced at $1.1734, only slightly changing from $1.1732. As we navigate these complex financial waters, one must ask, are we witnessing a temporary fluctuation, or is this the beginning of a more significant economic shift? What are your thoughts on the potential impact of the Fed's decision? Join the conversation in the comments.